Hello, everybody, and welcome to the 54th edition of LM's Weekly Wrap, our weekly program to cover the markets, the developments in the domestic as well as the international markets. This week was a dull week of sorts in the sense that we had a start to the earnings season, but on expected lines, the IT sector companies were expected to put up a very muted kind of a performance. The muted performance was in line with what the markets had expected, but I think still the domestic markets in very strong bullish phase, and we are seeing very good support from the FIIs. The FIIs have been consistently buying into the market. So I think despite the fact that on the fundamental ground reality front, I think there was very little change in the dynamics of the market. But despite that, we've seen the market continue to make new highs. So global cues are positive, and the domestic cues are more than positive. I think today I'm accompanied by Jash. He'll be throwing light on the international developments as well as the domestic developments, which will be followed by the sectoral outlook from my side. So welcome, Jash, and take us ahead.
Thank you so much, sir. As usual, I'll be starting with the Nifty levels. Last week I had said that the Nifty had hit a record high, and we would expect some kind of consolidation. If we go to see the start of this week, 3 trading sessions, the market was flat, range bound. But today again, we have seen some new record breaking levels for Nifty and Sensex both. I think this is well in line with what we said, that the price to earnings ratio of the Nifty is actually lower than what it was in 2020, because the corporates have been posting good results, marginally positive. The margins have improved, and we've seen some results in this week which Nirav sir will throw light upon in the later section of this video. So I think all in all, the investors are happy. I think investors are still wondering on missing some kind of bus. They're still trying to catch the bus. We get calls every day on what to buy and what to sell. So it is a slightly tricky situation, but those who have invested are riding the rally and booking profits at every point. Coming to the global side of the developments, we've seen the inflation in US markets touching 3% levels. This is lower than what it was anticipated, but the numbers are good. Dow and Nasdaq was it was quite strong and it was up. So the markets are cheering that. So whatever steps taken by the Fed are coming into picture now, and this is well ahead of 26th July meeting of Fed. So this gives some kind of direction on what they're going to do with the rates. Maybe they'll keep the pause for another 1-2 sessions maybe, because the data is positive. Otherwise they had said they're going to have increased the rates for 2 more sessions previously. Let's wait for 26th July and we'll get an idea on what they're going to do. Coming back to the Indian markets, we are seeing whereas the US markets is comfortable with the inflation, we are seeing the sudden spike in the CPI we're going to see because of the vegetable prices skyrocketing. If you go to see, tomatoes are in the news. Tomatoes are trading at 200 rupees places and all sorts of stories. But this is very seasonal. It happens every year. There is 1 or 2 vegetables that always see a hefty spike, and then it normalizes within a few days or month. So it was onions previously, there was potatoes also was there, and now it's tomatoes. So it is very seasonal. Think it would go back normal in a few weeks or a month or 2, definitely. Another thing that I would point out is not very related to the market, but it is the climate change that affected north part of India. We've seen a lot of life loss and destruction of the infra and the villages and towns and cities over there. I think this is because of climate change, and not much to say there, but so hence in the world of stock market we are seeing the ESG practice that has been taken into place. We have a separate video series on that, so do have a look whenever you have time on that, and I would like to hand over to Nirav sir for the rest of the session.
Josh, thank you so much for the inputs. And I think we're still starting off from where Jash left. Basically, we are seeing climate change across the globe. Glaciers are melting. We are seeing global warming, and we are seeing erratic patterns of rainfall. We are seeing some places where there is excessive rainfall. Some places are just devoid of rainfall. Whenever there is rainfall, it doesn't fall in a uniform pattern. There is excessive rainfall, which is leading to flooding and which is leading to loss of life, precious human life and property.
Even fodder is
yes,
being impacted.
Yes, and it destroys the standing crops.
Correct.
So whenever we have an erratic pattern of rainfall, or wherever we have excessive rains, it has an impact on the standing crops, loss of life, property, etc. And needless to say that we've seen this all across the globe. Last year we've seen this happen in Pakistan, the kind of floods which the fury which we have seen over there, which completely damaged their economy. Similar patterns we are seeing just now in the northern part of the country. So the need to preserve the environment, the need to concentrate on environment. We are seeing a lot of action coming in from the corporates on sustainable energy goals, on decarbonization, on the green initiatives, etc. But clearly a lot of effort still needs to be put into all these initiatives. A few companies which are working progressively in this direction, which we like to point out, and which we've been saying again and again, pointing out again and again, companies like Praj Industries or Ion Exchange or Thermax or Excel Industries or Vatek Wabak. All these companies are working on the environment aspect in a very, very serious way. Needless to say, a lot of companies which are into steel, cement, metals, etc., they are also doing their bit for the decarbonization efforts. But I think clearly a lot more needs to be done, because the damage which has happened to the environment is very of a very high magnitude. So just coming back to the markets, we have this week was characterized largely by the IT stocks. We had the earnings from TCS, HCL Technologies and Wipro, which hit the markets, and needless to say, it was in line with muted estimates. We had really no expectations from these companies, given the kind of commentary they had given in the previous quarters. They had indicated that they will not give any guidance, taking into account the fact that the uncertainty factor is very high. The same trend was visible. The deal flow is more skewed towards cost optimization deals. Most of the clients have cut back on discretionary spending and are willing to spend only where their cost optimization is visible. That means they are only willing to spend where they are going to see the visible results as far as cost saving is concerned. So I think most of the corporates, whether it is overseas or domestic, they have in a kind of way they have become very cost conscious. They want to defer discretionary spending for the time being, do not want to incur any unnecessary cost at this point of time, and preserve the resources for a rainy day. So I think that is the crux of the IT companies. Most of the IT companies have given commentary which is on similar lines. They see uncertainty, especially in the BFSI sector, that is the banking and the financial services and the insurance sectors in Europe as well as US. So I think all these factors having an impact on the IT companies. But in the markets, the mood is quite different. I think we've seen some very strong short covering rally which has happened after the IT companies have declared their numbers. The IT stocks were subdued for a brief spell of time, but I think now TCS has hit today. It has hit a five-month high. We've seen movement in Infosys, TCS, Tech Mahindra, which were amongst the big gainers of this week. And we've seen some good momentum happening in metal stocks too. Hindalco has been a good gainer in this week. We've seen some good momentum in auto stocks like Tata Motors, Eicher Motors too. So I think today the rally was whole and soul driven by the IT stocks being in the limelight, and later I think Tata Steel has also joined the rally. So IT stocks in a space of their own. When we saw that the large cap IT stocks were subdued for a longer period of time, and when they have started moving up, the mid cap IT stocks have moved up with double vigor in the market, because their performance has not been that bad in the recent past. So we're likely to see this trend at least continue in the near future. But this raises a fundamental question that if the outlook for the IT companies is not so strong, whether this rally is capable of sustaining at these levels. So that is an important aspect which we need to take into account. Next sector is banking. I think PSU banks being the weakest of the lot. Yesterday we saw PSU banks were under pressure ahead of the earnings. The PSU bank index was down about 3% in trade yesterday, and most of the PSU banking stocks were down in the range of 1 to 5%. Private sector banks continue to be to roll strong, and next we come to capital goods. I think the capital goods have a sector is in a positive growth trajectory, because the capex cycle has been very, very strong. We've seen some commentary from Escorts Kubota talking about very, very strong volumes as far as the construction equipment space is concerned. After that, we had indicated that it is likely to have a spillover effect on Action Construction Equipment. So ACE moved up in trade after this commentary. And now during the week we had results from Elecon Engineering, which has posted very, very strong set of numbers. Now after the Q1 results of Elecon, the stock has got re-rated, has crossed the 700 levels. So I think the capex cycle, which has turned around, is really showing some good results. We've seen the good momentum, as I said, in Elecon. We had our LG equipment, which has received a strong order from Siemens. It's a 10-year contract which they have received, and which also includes a 35-year maintenance contract. So I think LG equipment making a new high post this order which they have received. At the same time, we are seeing orders being won by KEC International, likes of Kalpataru Power Transmission, and all these companies have been on a tear. Even companies which are hitherto written down by the markets like HCC or Patel Engineering, they have also started surging in trade and are moving up in trade as they receive more and more orders, and the execution is gathering momentum. So I think infra and capital goods is going to be the space to watch out for in the near future. And when the infrastructure space does well, then I think it definitely has a rub-off impact on steel as well as cement. So these are also expected to do well. No major developments as far as FMCG is concerned, at least at the moment. The same view that is likely to post better improvement in margins going forward. Pharma remains on the comeback trail. There are a few stocks which are trying to make a comeback in pharma. These stocks include the like of Newland Labs or Natco Pharma or Star, Shilpa Medicare. These are all stocks which are trying to make a comeback over here. And we have oil and gas. In this, I think we have Reliance, which continues to do well in trade. So I think can sustain the momentum over there. Rest, I think railway stocks have been quiet in this week, but it's been the defense stocks which were in top form, top gear in this week. We saw the shipbuilding stocks gain very smartly in trade. We saw our weekender stock ideas like Bharat Electronics and Midhani, which surged well in trade. And we have textiles, which is also trying to make a comeback occasionally, and hotels, which also look like a good theme. I think that kind of pretty much sums up our session for the day. Do write back to us with your feedback on our program, and I now hand over to Jash for the closing comments. Jash?
Thank you, sir. Please keep following the series for more insight on the market. Thank you.
Thank you.